Good day, ladies and gentlemen. I hope you're well. So, in today's live stream, we're going to be focusing on a technical breakdown of one of Bitcoin's most useful cycle indicators, the Puell Multiple. So, most of the things in crypto and most of the things in, well, pretty much all of the things in this space are all about noise. They're all about talk. They're all about to talk, and it's all surface. It's all about the price, the narratives, the short-term volatility. But what we're going to be looking at today is something completely different. It's going to be what's underneath the price and the part of the system that actually powers Bitcoin, and it's to do with the miners and their economics. So miners. If you watch this channel, you will know about miners. And you would know Bitcoin is a proof of work blockchain. So the miners are the operational backbone of the network. We don't talk about them enough. I didn't really understand them too well until I was studying the blockchain wars, which happened around about from around about 2015 to 2017. But they are very, very powerful, and they secure the chain. They produce blocks. And their behavior across the bull and the bear market does affect Bitcoin quite a lot. And one of the things that we don't really talk about with mining is how massive it is. There's massive institutions in mining. A lot of banks are getting into mining. And not only that, there's a lot of countries that are in mining as well. Let me just put up my Crypto Princess Army banner. And then we're just going to go and have a look at who's in the chat. But this is the sort of thing that we're going to be looking at today. So this is the Puell metric, the multiplier, and I absolutely love this metric. You're going to learn how to read it. You're going to know everything about it, all its history, what it does, how to use it, who uses it, why they use it, why is it so powerful. And obviously we're going to learn about miner revenue and when it's unusually high and unusually low. So the Puell indicator, the multiplier, is miner revenue today compared to the last 12 months. And we'll go into all of that shortly. So don't worry too much, especially if you're not technical. I'll break it all down for you. Just quickly, let's have a quick look at who's in the chat, because I know there's a couple of people. So we've got Mike. Welcome, Mike. Mike, our king mod. So proud of him. He does so much. We've got Black Hat Team. We've got John Legend. We've got Mr. Alex Storyteller. Good day to you. I hope you're well. Oh, and then there's John Legend. He's so lovely. He's like, share, and subscribe. We've got David Bowles. I hope you're well. And thank you so much for reposting all my stuff that you do for me on X. I do appreciate it. We've got Chipper. I hope you're well. And we've got the lovely JR, who's joined the Princesses Army as well. Yeah, JR is. Bless him. He's so cute. I think you've got some emojis up. I don't know which ones they are, but that's awesome. Oh my God. And we've got Rob C. Hello, Rob C. I hope you're well. Yeah, so, okay. Awesome. Right, let's get straight into it, because there is a lot to cover. And it is actually a very, very easy subject if you know what you know. And it's just that, it's that thing that we go on about in crypto. Before you understand crypto, it seems very, very difficult. But once you understand it, it's quite easy and you kind of know what you're talking about. So it just takes a little bit of time. So here we go. This is what we're going to be talking about and discussing today. That's pretty much what it looks like. We'll go through all of the history of it. We'll Oh, and look, we've got Jessie as well. Good afternoon, Jessie. I hope you're well. Bless you. Right. So when the Puell metric is low, it typically reflects when miners are stressed. Now, when they're stressed, in plain terms, it means that the miners are losing money. Now, miners are very, very sensitive to price in Bitcoin, and we're going to be talking all about that as well. They are actually the first to sell. When it comes to inefficient miners, they are always forced to shut down, repurpose, exit when they can't make enough money. And historically, those periods have occurred around deep bear markets. When the reading of the Puell indicator or metric is high, it reflects unusually strong miner probability. Miners tend to sell more to cover costs and to lock in profits because they are acutely aware of the 4-year cycle. And historically, these conditions tend to cluster around the later stages of the bull market. It's not a single indicator or a one-step strategy. That's really, really important because it doesn't call the exact top or the bottom. It's a tool to measure what's happening in the network with the miners who are very, very sensitive to price swings in real time as well. So by the end of this live stream, you'll be able to interpret the Puell multiple properly, what it signals, what it does not signal, and how to use it in the broader economic macro on-chain framework. So remember what we're talking about on-chain. On-chain literally means the data is coming from the blockchain as well. So it's not coming from exchanges, it's not coming from influencers, it's not coming from the media, all the rest of it. On chain, you're literally getting it from the blockchain, and it kind of means it's very much less open to manipulation. And we know that there's a huge amount of manipulation in the crypto market, unfortunately, and it's very, very unfortunate. Crypto can be a dirty space if you do not know what you're doing. And I think we've all fallen at one point victim to that. And it's just one of those things. The more that you discover crypto, the more that you learn about it, the more that you are humbled, because the more you realize you don't actually know too much about it. So Bitcoin itself shouldn't just be seen as a price. When we do that, we're doing it all completely wrong. Bitcoin is a full-on ecosystem. There are 4 parts to Bitcoin. We have the code. I actually love live streams like this because we can go a lot deeper into what Bitcoin is. So we have the code. Now, Bitcoin's code is open source. It's available to everyone. And it has fixed rules like the supply limit, the halving schedule, some of the tokenomics, all the rest of it. It's a fixed supply. You can't change. Nobody can change the Bitcoin code. We do have developers though on the Bitcoin network, the blockchain, etc. I was very, very confused about this when I first started to look into them. I was like, well, how can we have developers when we can't change the actual code? It's basically the Bitcoin core development or the core development team. And what it does is it maintains the software. They're very important. Bitcoin software now is 16, 17 years old. That is super old when it comes to technology and when it comes to blockchain technology and Web3, almost ancient. So what we have is we have Bitcoin core developers. Now, they work on the code, but they don't actually change the fundamentals of Bitcoin. It is kind of confusing. I know it is. It took me a while to get my head around it. What they do is They maintain the software. They fix the bugs, they improve security, and they help everything run a little bit more efficiently. You can go out there and you can download or you can get Satoshi's original code, all the rest of it. That is still available. That is still available, but with the Bitcoin core developers, it's a massive thing. So do you remember when I spoke about what's its name? Segwick, which came out in 2017. You have to have a massive consensus on this. It's not something that just a group of people can come together and say, okay, we've noticed that there's a bug here, we're going to fix the bug, everyone run our software. It just does not work like that. So you have the code, you have the developers. Now the developers are powerful. They used to think, or at one point they thought they were as powerful as the miners, as the exchanges, as retail themselves. Everyone got humbled in 2017 when we had the end part of the Bitcoin wars. And now everyone just works together. Then you've got number 3, you've got the operators, you've got the access layer. Now, these are the people and the companies that keep Bitcoin usable. They run the nodes that help verify the rules. Very, very important. They are the exchanges, they are the wallets, and they're the, and that's where you get people, normal people get access to Bitcoin, if that makes sense. And the last thing, the last of the infrastructure for Bitcoin are the miners. And it's the miners that we're going to be talking about today. Miners and mining pools secure the network and they produce or they help produce new blocks. They mine the blocks. They are literally real businesses. They have real costs. So their profitability matters, and it matters hugely. And this is what the Puell Multiple does. It looks at how profitable they are, because if they're not profitable, we've got issues and we've got problems. So how important is, what are miners? How important are they? So miners can be individuals, or they can be companies, or they can even be countries, like we saw with Iran in 2016 and 2017, when Iran kind of went rogue after it got sanctioned because of its nuclear program, if that makes sense. So what they will do, they all do the same job, whether they're a massive company, whether they're a country, whether they're individuals. They run machines that secure the Bitcoin network and produce the new blocks, and they earn revenue in 2 ways. So node operators who just verify the transactions, you do that for free. But when it comes to miners, they are proper businesses. They earn revenue in 2 ways. The ways that they earn revenue is they create new Bitcoin, and then also, so they mine Bitcoin and also from transaction fees. And these are paid by users when the transactions are confirmed. Now, when you're running or when you're using a centralized exchange, blah, de, blah, de, blah, the exchange or the DEX, it does it for you behind the scenes. So you don't get to see, or you don't get to choose how much money you're paying how much money you're paying for the transaction. It just gets done automatically. However, if you pay more money, it incentivizes the miner to verify your transaction a lot quicker. But the miners, what they do have is they do have ongoing costs, and we're going to be talking about the costs just in a second. It's mainly things like technology, hardware, cooling, maintenance, space, security. Oh my God. I remember when I had Mind Your Biz on this channel. So for those people who are unaware, we have a series called Crypto Stories. And Mind Your Biz came on to tell, obviously, his crypto stories. Something we didn't cover in the crypto stories was that these massive companies and institutions, when they have these warehouses filled with all of these machines that are mining Bitcoin, they do need to protect them. And I think he's based either in America or he's based in Canada. I don't know what the gun laws are in Canada, but he was saying that he was there in one of these massive warehouses, and the guy bent over, and as he bent over, a gun fell out of his I don't know where he had it, his holster, or his, wherever he was carrying it, because they have to protect these machines and everything that they have. But that was my first time actually realizing the different things that go on in mining Bitcoin. I wasn't really aware of that. When I look back at it, I'm like, well, yeah, kind of should have like realized if they got millions of pounds of Bitcoin hardware, they do need to protect it, so they might have guns. But that was cool. And he told me the story. It was like so fun. I actually regret not putting it in the video. So they have ongoing costs that they do need to cover. Mining, as we know, is a process where Bitcoin it keeps the ledger honest. The ledger, that's where we write down all the transactions, or Bitcoin writes down all the transactions on the blockchain. And it does it without needing a central authority, without needing a bank, without needing anyone to oversee it, because of the blockchain itself. Blockchain technology is absolutely amazing. Miners do take new transactions, they package them, and they obviously put them in the block, and then they complete and they solve proof of work puzzles. And the first miner to find a valid solution, or to find the proof of work, solve the proof of work puzzle, that's the one who gets rewarded with Bitcoin. And we'll come back to that in just a second. We've got things that we can talk about, like the hash rate, etc., but I don't think we need to talk about it today, if I'm completely honest. We might have to actually touch upon the difficulty adjustment, but we don't want to get too technical. But we do need to talk about timing, because roughly Bitcoin mines a block every 10 minutes. And this is to keep it consistent. And this is something that's called difficulty adjustment. And what happens is every 2 weeks, round about just over 2,000 blocks, the difficulty adjustment automatically from the blockchain adjusts to make sure that there is one Bitcoin mined every 10 minutes, because it takes into account that if more miners join the network, the total hash rate rises and the difficulty has to go up. And then obviously on the flip side, if miners leave, the hash rate drops. And the difficulty obviously comes down, and we see that in bear markets and sideward years. Bitcoins are paid with obviously the new Bitcoins that are issued, plus the transaction fees. And then we have, over the years, every 4 years, we have a halving. Let's talk about the halving, because this is quite important. This is quite important. So we have the halving. The halving is the only solid structure in the Bitcoin network. And the halving schedule occurs roughly every 4 years. And it makes, bearing in mind that the blocks are mined every 10 minutes. When Bitcoin was first invented, or first came out in 2009, we had 50 Bitcoin for every award. So every 10 minutes, 50 Bitcoin was, what is it called? Was issued, if that makes sense. When you hit a block reward, you'd get 50 Bitcoin. Then we had the first halving in 2022. 2012, and it reduced because of the halving. It reduced the amount or the reward of the Bitcoin from 50 to 25. Then we had the next halving, which was just before the bull run of 2017. It was in July 2016. That reduced the amount of Bitcoin that was mined from 25 and it went down to 12.5. We had the third halving in the pandemic year in May 2022, just after that massive V-shaped dump because of of COVID and everyone going into lockdown. In May 2022, the block size awards were cut from 12.5 to 6.25, 6.25. And we're currently in the fourth era. So we've had a Bitcoin halving last year, April last year, and that reduced the block size or the amount of Bitcoin that was going to be issued every 10 minutes from 6.25 down to 3.125. So every 10 minutes, currently we're getting just over 3 Bitcoin are mined, if that makes sense. And it's just going to go down and down and down. And this is built into Bitcoin. It's a slow way of releasing the supply over time. And it makes the issuance more scarce with every cycle. And it's eventually going to go to zero. And every time we have a halving, what do we always have? The next year, we always have a blow off top. We always have a bull run, except in 2025, which is just, it just is. So we're very, very early. We're up here. I don't know if you can see my cursor. I have got no idea. And then in 2,100 and what is that? Hang on. I can't even see it because it's underneath the ribbon that I've got on here. I think it says 2,136 in that year. There will be no more Bitcoin, there will be a tiny Bitcoin. Around about that time, the miners will be getting rewards from transaction fees. Oh, okay, Mike. Guns are basically non-existent in Canada. Oh, okay. I've got a feeling Mind Your Biz was from Canada, but maybe it was. I do apologize. Yeah, I've got a feeling he was in Canada, but I'm not entirely sure. Okay, let's talk about the miners before we go into talking about the Puell multiplier, the indicator, the on-chain indicator. We do need to cover mining costs because these are directly, this directly influences what happens in that time. So with mining, currently it's cheaper. It is cheaper to mine Bitcoin than buy Bitcoin, and I'll show you that as well. I'll show you how I know. But we have lots of costs. We have the main cost is electricity. This is usually the biggest cost, and it's not just the machine. It is the power to run the entire site. Like I said, they have massively big warehouses now. It's also the cooling system and to keep the machines from overheating. Now, when I was looking into when I was looking into mining for myself and building a Bitcoin, thank you, John Legend. Guys, please do hit the likes. When I was looking into mining, and I actually wanted to build a mining farm for myself, but I wanted to do it for myself instead of getting somebody to host it. One thing that I realized quite quickly was how hot these machines get. You cannot have a miner in your house. It will just get too hot. It will get, it's just too loud and it's too hot, and you have to kind of cool it as well. And you have to have a lot of ventilation. The mining machines produce a lot of heat, so miners have to pay for, fans, ventilation, air conditioning, or immersion cooling. I don't know if you've seen some of these miners, and they're literally in these kind of looks like fridges, and they have they're in water just to keep them cool. So cooling itself increases the electricity bill. Then you've actually got to buy these miners. So most of the main machines are actually called ASIC. ASIC. They are expensive and they do not last forever. Oh my gosh. I've got so many stories about people who have bought ASIC machines and they are in loss. Newer models are always more efficient. So the older models or the older machines become not worth running in a couple of years. Now, I don't know if you guys know a gentleman called the channel's called Modern Canadian Miner. I was speaking to him in the last bull cycle in 2021. He wanted to get into mining, so he got into mining. He bought these machines for 5,000 Canadian dollars. 2 years later, in 2023, he had to sell these machines for 500 Canadian dollars. That is how much they lost, value that they lost. And it's not just the machines as well. So every 6 months, China especially is bringing out newer models and more cost effective, all the rest of it. And I do remember, who was it? Tactile Investing. He was on not too long ago, just a couple of months ago, and he's also a miner. And then what he told me was that obviously when the bull run comes in, everybody who wants to be a miner, all the rest of it, everyone's making lots and lots of money. And what happened with him, he got really, really lucky. And again, this is the last bull cycle. In 2021, he decided that in 2021, a company decided that they wanted to get into mining, not knowing or just not planning ahead. After every bull cycle, there's always a downturn. There's always a bear market because the price cannot be sustained. So what they did was they bought 50 of these machines, a huge amount. Come the bear market, they had to sell them, and he bought them on the cheap. And I think in all, he made millions within the first year, because with mining, it's so important to build in the bear. There is absolutely no point building your mining farm in a bull market year. Absolutely none. The amount of money you're just literally going to throw away your money. Not only that, some of the costs that the miners have is obviously the repairs to these machines, the maintenance and downtime, especially if they had to be taken offline. Machines break, fans die, power supply fails, boards fail, all the rest of it. There's repairing costs involved. Downtime can also cost money, because when you turn off the machines, it's earning nothing. Miners also have to pay for, I kind of feel sorry for them. I wanted to be a miner not too long ago. I don't want to be a miner anymore. They have to pay for space. They have to pay for facilities. This includes things like rent, land, warehouses or containers, the building setup, the security, the insurance, and sometimes local permits as well. Casper used to be really good. It used to be really, really good to mine. Dogecoin is better to mine than Casper nowadays. And then obviously you've got your own, you've got Bitcoin as well. And we'll get into mining pools in just a second, because that's just the way that they run. And it's quite, that's just the way that it run. They run. You also need to have a lot of electricity and other things, the infrastructure on site. You need to have, if you've got a lot of money tied up in a certain place, you just can't lock the door and walk away. You kind of need to have full 24-hour security. You should see some of these mining farms. They are massive, and some of them have actually spent a lot of time making the building that they house these miners in look very, very nice as well. They've made the buildings pretty as well. So even if the power is cheap, Bearing in mind, El Salvador have a volcano and they want to run literally a lot of mining off this volcano. Um, so, technically it's not going to be that expensive. And then you also have hydroelectricity as well. Because I was speaking to miners and they were just telling me so many things. And also, the UK is a terrible place to mine because of the electricity costs. You need the equipment, you need to handle things safely, you need transformers, you need wiring, you need the switchboards, the meters. Sometimes you need to back up your system. There's a lot of costs up front. I was more than happy to pay the costs up front, and then I realized how much they were. So I've said no to a Bitcoin farm because for me, I don't think it's going to be worth it, especially not in the UK. And because I micromanage everything, I'm not going to go for I'm not going to get someone to host it either. It's just for me personally, it's not worth it because there's there's too many big players in it. You also need somebody to monitor these machines, fix them, all the rest of it, order parts, deal with any local rules. Large operations now run teams. This is big, big money. I'll tell you how big it is. In Canada, I know a person who was the for the whole of Canada and America. He was the guy for one of the biggest mining companies in the world. And it was so big that there were banks coming to him, banks, and they were talking about $500 million dollars worth of just putting these farms together, up to $1 billion US dollars worth, because the banks obviously want to get into mining, don't they? So he was saying a lot of banks are coming up to him. So mining does also need reliable internet. So you can't have it in the woods in the middle of nowhere. You also need to pay for the software, you need to pay for the systems, you need to monitor the performance, and somebody needs to be alerted if something fails. You've got the mining pool fees, because nowadays individual mining doesn't really get you the blocks. You can do individual mining, it's not an issue, but it doesn't really get you the blocks. So most miners use pools for a steadier form of income. Pools generally give smaller awards, and then obviously you have things like hosting fees if you don't run your own site. And some miners obviously don't own their own facilities. They have to pay for hosting companies. They have to get somebody else to run their machine. And there's always fees included in that. Other things that miners have to pay for is financing and interest. Now, I'm very, very, very much against all loans, and anyone who knows me knows I don't go there. But this is the world. Many miners borrow money to buy these machines and to build this infrastructure. And they can do it through loans, but if they do get loans, they have all of the, they have to pay interests, and that doesn't stop in the bear market. There's tax, there's rules, there's compliance. And this is so many things I learned when I was trying to get my own farm together. Um, it's also dependent upon your country as well. The UK is a terrible place. It really is a terrible place to mine. Some places also have extra taxes, licensing, restrictions that add to the cost or the risk. Other countries let you offset a lot of the money that you're putting into building your mining farm as well. So it does depend on your the country that you're in and how good your accountant is. Obviously, you've got shipping costs, you've got customs for the machines, and also again, if you need to order some parts. And then obviously you've got VAT, there could be delays, all the rest of it. And God forbid if a lot of machines broke at once. Energy problems as well, for power cuts in some regions. Miners are forced to shut down as well. They're not suitable for the grid, or seasonal electricity charges as well. There's risk management, all the rest of it. It's amazing that a lot of people actually still do mining. It really, really is, but it's actually turning into an industry for the professionals, if the institutions, and I know a lot of banks are coming in. So mining isn't just literally, it's not anymore. It was literally you just plug in a computer, it's power, there's heat, there's machines, there's so many other things that is now required to mine. And that's why the profit of mining can change very, very fast. So if Bitcoin drops in price, their revenues drop immediately. If the hash rate increases, the difficulty increases. They have to work harder and they have to spend more money in earning the same amount, bearing in mind at every halving, Bitcoin's getting scarcer and scarcer, which also means that the price of Bitcoin is always going to go up. And obviously, then you've got things like, well, what happens if the energy rises in that particular area? Do you remember when we had the cost of living crisis? In the UK, our energy prices literally hit the roof. A lot of companies, businesses actually had to close their doors because of energy costs. So miners, so that's a little bit about miners. It is very difficult. I was very much put off having my own mining farm. Very, very much put off. Um, there's also countries, remember that as well. So you have the individual miner, bless him. It was in 2011 or 12, just before Bitcoin's first bull run, that people started to go into mining pools rather than be individual miners. That's when the shift sort of happened. So anyway, you have individuals, you have these corporations, you also have countries coming on board. So most of Bitcoin mining, like I said before in some of the other live streams, Iran really got in there. I do know Pakistan's getting in there. I do know Paraguay's getting in there. El Salvador's getting in there. China has a massive issue with control and all the rest of it. So, uh, yeah, no. Oh my God. Of mining, my goodness. A lot of respect for the miners, a lot of respect. It's not as easy as you think it is, or as I thought it would be. So most mining nowadays happens mainly in a few countries, which is very important, and that's especially the United States of America. With Russia and China, they're the big three. After that, there are many other countries involved, but they have a much smaller share of of the mining power. So miners usually choose places with cheap electricity, reliable power, and regulations that don't make mining impossible. China, and we will be talking about this on a different live stream when we talk about how China's manipulated the price of Bitcoin multiple times before. It's now heading towards stablecoin, but mining was one of the things that it really attacked Bitcoin for. And we spoke recently about Russia. So Russia manipulated the price of Bitcoin because it was going to go to war, and Bitcoin is the best performing asset to hold in war. China has repeatedly manipulated the price of Bitcoin because it wants to have more sovereign, more control over its people. It doesn't want it doesn't want a decentralized monetary peer-to-peer system, if that makes sense. And the United States, obviously, like all the time, they're manipulating the price of Bitcoin and crypto. Let's not mention the Trump coin. Okay, so colder places. Yeah, okay. So there are countries with colder areas. They're very, especially the smaller countries. They're starting to get into mining because one of the major problems with mining is the heat and the noise that it produces as well. So mining is done by obviously a mix of people, a mix of companies. There are some very, very large mining firms with very big sites, and their sites are very, very impressive. But most of the mining nowadays is just done in large scales. Now, just very quickly, just before we move on, let's talk about pools and individuals, because the Puell multiplier does not care whether a miner is using Bitcoin or mining Bitcoin. It comes from a solar miner or a mining pool, because it does not measure who's earning the revenue. It only measures what the network's total mining revenue is in dollars. Is that the time? Has it already been 40 minutes? I have literally so much to talk about. Oh my God. Okay, so very quickly, the Puell multiplier doesn't care whether Bitcoin is mined from solar miners or the mining pool. It just focuses on the bigger picture, the bigger view of most of the miners. Where are they? Are they in profit? Are they in loss? If that makes sense. So the Puell multiplier is a very simple way to see when miners are earning a good amount of revenue or an unusually low amount of revenue from mining. It's very, very important. What it does is it compares the daily value of new Bitcoin mined. And then obviously we've spoken about this multiple times on the channel. Every day around about 144 Bitcoin is mined. And it compares the amount of Bitcoin that's mined per day to the price of it times the price, to the average value that it's been over the last year, over the last 365 days. So when the Puell is low, miners' income is low compared to what it was in the last year. And when it's high, miners' income is obviously high. Good days. So it helps us to spot the bottoms when the Puell drops very low, and that's under 0.5. It often means miners are under pressure. Remember all those costs that we've just gone through. Miners are under pressure. Some miners are struggling to pay the electricity bills, the operation costs. The weaker miners may switch off their machines. They might sell some of the Bitcoins to survive. They might even shut down. That's mining or miner stress. And that tends to happen late in the bear markets, which is why the Puell levels often appear around major bottoms. And then if we look at the tops as well, when the Puell climbs to very high levels, and we'll talk about this because there have been diminishing returns, it usually means that miners are earning a lot more than they usually do. Their profit margins are huge, so they're more than likely to sell what they mine, and sometimes even extra Bitcoin that they've saved from the bear market. When the price is attractive, because they always need to sell. They're not like investors, they're not like traders, they have daily costs to cover. This adds this adds volume to the sell supply, if that makes sense. And it often happens when the market is already hot or hot, or it's very near the bull market peaks. Now, the key thing here is to treat the Puell as a warning zone. It's not a perfect timing tool. Low Puell can mean Bitcoin, bottom conditions are forming, and high Puell can mean that, we're going into a region where it's going to be high, if that makes sense. Let me quickly go through the history of the Puell. One second, let me just try to share my screen. Okay, I'm just adjusting my screen. Just give me a second. Oh. Um, mhm. Okay, there you go. So what this is this is the Puell multiplier or multiple. We can see at the moment, can you see my, oh yes, you can see my cursor. Oh my gosh. It's undervalued. So at the moment it's at 0.86. It's at 0.86. Now, what we see here is this is into 2020, 2011. This is something that we're going to have to talk about very soon at some point. Can you see in 2011 when we had like this massive blow off top, and in the same year, we had pretty much a bear market bottom as well. So cool. So yes, okay. So here we've got the two peaks of 2013. Oh, it's not showing me it. Hang on. I don't know why it's not zooming in. Okay, let me try another one. Okay, so this is not zooming in, which is a bit annoying. 1 second, let me just change my screen. Okay, let's do it on here. Can you guys see that? Okay, awesome. So here we've got the Puell multiple indicator. And this is April. Let's go to the first bull market bull run. The first bull run in Bitcoin's history. Here we see on this side, this is 10. So anything above pretty much 2 is considered the top of a market. But we have diminishing returns. So back then, this was over 3. Over 3, and then we had a lot of miners in a huge amount of profits here. So they were starting to sell. And can you see this line here? Do you guys remember what happened here? I just tell you guys. This was Mount Gox. They had an issue just for a couple of hours with their transactions. And back in 2013, Mount Gox was Bitcoin. So when people saw that, they literally left Bitcoin and they were like, oh, this is a failed experiment, blah, 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 blah. So this was the first peak in 2013. And if you remember correctly, around about here, the Pi cycle top was hit. I think the first time it was 3 days out or something similar to that. Then we have November 2013. And in November 2013, or was it December? Yes, it was in December. December 2013 was the second peak. I think it was on November the 30th, actually. But can you see here, with the Puell multiplier, the miners started to be in access a lot of profits back in November. So 1 month before the actual peak price of Bitcoin. This was reading as basically a cycle top, if that makes sense. Then we have the bear market bottom. Anything under 0.5 means that the miners are not making a lot of money, and it just says round about this time we could be in the bear market bottom. And here we did actually have a bear market bottom. So when the price went under 0.5, There you go. Under 0.5, it kind of tends to mean in this area, this is pretty much the bear market bottom. A lot of miners are turning off machines. A lot of miners are losing money. A lot of miners are using their savings, or they're actually selling Bitcoin. We had 2020, 2017. So 2017 here, all the way up from 2016, the miners were in a huge amount of profit, a huge amount. Literally, they spent most of the year. Oh, sorry, not the miners. Bitcoin. Bitcoin spent most of the year going up. The miners went up round about this time. Here. So as you can see, it was in the red round about November, and it was towards the end of December when we had the blow off top for 2017. And you can see around this area, the Puell multiple was signaling a top. Come the bear market, it was right there again, and it was signaling a bottom, literally at the bear market bottom in 2018, which was obviously the year afterwards. Now, this is where it gets, if you can see, if I don't have this on a chart, but if I had a chart, I would be able to draw maybe a trend line from here. We're getting diminishing returns because a lot more miners are coming onto the network. The rate was adjustment, the difficulty adjustment's gone up quite a lot as well. And we're just getting diminishing returns. So here there wasn't very many miners, although pool mining had started, sorry, this is 2011. Pool mining has started around here, 2011, 2012, just before the 2013 bull run. So if we could even draw a trend line, maybe it would even hit this, probably not, but from here it could have done. We had 2021. So here we had the first part of the 2021 bull run. And it went over 2. Remember, it doesn't have to go over 3. It has to go over 2. That's the price. So here I'm starting to point at it now. So anything over 2 on this particular version, it's basically everything over 3. But normally, the way that it's calculated is anything over 2 is the top, the miners going into the area where they're making lots and lots of profit, and anything under 0.5, they're kind of selling, if that makes sense. And for most of the year, we could see that they were in a lot of profits. Now, do you remember in November, here we go. We did not hit 2 here. So in the actual all-time high in 2022 was in November. The Pi cycle top was not here. Bitcoin dominance didn't fall. In November 2022, that was mainly driven, the actual all-time high was mainly driven by the supply shock in Bitcoin, retail money, and altcoins. And this particular metric, just like the Pi cycle top, was not hit. So it's not bulletproof either. And right now, at this moment in time, it's all the way down here it's at 0.8. So the miners at the moment are completely fine. Oh, in November last month, I think it actually went down below. I think it actually went down below. Let's have a look. Oh no, it didn't. It got down to 0.67. So it didn't go under 0.5. When it goes under 0.5, the miners are really stressed. Some of them will go some of them will go out of business, many of them will turn off their machines, or what they can do is they can repurpose their machines as well, which is something that they're doing a lot more nowadays. Anyway, that was the Puell multiplier indicator. We will be touching upon that, and we will be discussing it in later live streams, especially when we go through all of the indicators, trying to find the tops and the bottoms. I don't think Randy was on today, but that's absolutely fine. Thank you for that, Black Hat team. And then, yeah, I will see you all next week. So on Tuesday, we've got the live stream with Bill Noble. And then obviously on the Tuesday after that, we've got the Christmas special. So do bear that in mind. I'll